central banks will start including Bitcoin in their reserves. And actually, it will become some competition for the world's reserve currency from that point of view, but it will also discipline us, I think, as well. So I don't think the dollar disappears. I think maybe Bitcoin and the dollar and maybe another currency start to dominate. We'll see. That's sort of been the history. So by 2030, we are in print for our base case as saying that we believe Bitcoin, which is now closing in on 40,000, will be at 640,000 by 2030.
ARK Invest founder Cathie Wood defied the major sell-off of Bitcoin, saying the world's largest digital currency is one of the most significant investments of our time. Since last year's banking crisis, many small and mid-sized banks have been trying to prevent their depositors from pulling out their money by raising interest rates on deposits. In response to the highest inflation levels since the 1980s, the U.S. Federal Reserve has raised the federal funds rate by more than 5 percentage points over the last 16 months. Market sentiment finally began to change in late 2023 as inflation cooled substantially. Federal Reserve officials are finally planning to cut interest rates this year, and Wall Street thinks that the first cut will come as soon as March. Cathie Wood speculates that the Federal Reserve is likely to cut rates in response to increased stress in the system, with the regional bank crisis serving as an early indicator. Looking at the market dynamics, Wood observes Bitcoin's leadership role, particularly during approving 11 Bitcoin ETFs. Cryptocurrency investors spent much of 2023 waiting for good news. Following the late 2022 collapse of FTX, popular digital currency Bitcoin traded just north of $16,000 to start the year, a far cry from the more than $60,000 it traded for during 2021's crypto boom. By the time news broke on January 10th that 11 new Bitcoin ETFs would begin trading, crypto investors were taking a victory lap, having bid the coin's price up by 155% in calendar year 2023. For the long term, Cathie Wood's base case envisions Bitcoin reaching $640,000 by 2030, with the approval of Bitcoin ETFs enhancing the likelihood of a bullish scenario with a target of $1.5 million. Let's delve into the few clips from the interview, but before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
I think one of the reasons for the regional bank crisis was the Fed raising rates at a faster rate than it ever has, up 24-fold in 17 months. Never seen anything close to that. Chairman Volcker increased interest rates twofold, not 24-fold.
Right.
So that was part of the regional bank crisis. And notice Bitcoin went up during that. So, and it is true, it probably was anticipating the financing program that the Fed put in place, which was a bit of a jog toward easing, and then it went back, a reverse course. So we think that the Fed is going to cut rates. Now, there are a lot of confusing economic data. We hear something from companies and something very different from the government in terms of economic activity. They're not matching up. They're not matching up at all. And so I find that very interesting. I think the Fed is going to figure out that there is much more stress in the system, that the regional bank crisis was the first sign of it, and we'll get other reminders, and that they will move into a rate cutting. Now, what we really think is going to happen is it's going to be less about real economic indicators. It's going to be about price deflation. We think, and Walmart has said, we're going to have to cut prices. That's deflation. That's not disinflation even, it's deflation. And I believe the Fed is going to be shocked at broad-based price deflation this year, and that will be, they're using now inflation as their primary gauge. They're not as focused on real economic activity because inflation has come down even without a recession. I think we've been in a rolling recession, but nonetheless. So inflation is the primary variable they're watching. We think there's going to be deflation, so they'll get 2% all right, and it'll keep falling. So they'll lower interest rates. That will be very good for risk assets, and Bitcoin among them. It was interesting. I think it was in late in the fourth quarter or earlier in January, Bitcoin led the market, and so began to. And so we're watching Bitcoin now, and of course we're having a sell on the news moment after the 11 Bitcoin ETFs are approved, and I don't know how far that's going to go. This is high frequency trading. It's people getting in just for that short boost and now getting out. But institutions and these retail platforms are going to start moving in, and then we'll see the scarcity value. So what is the price target? We have everything focused on the long term, but it takes short terms to make up a long term. So by 2030, we are in print for our base case as saying that we believe Bitcoin, which is now closing in on 40,000, will be at 640,000 by 2030. That's our base case. The Bitcoin ETFs have increased the probability of our bull case, which is $1.5 million. And if you want to see the building blocks of that, you can take a look at Big Ideas 2023, which we published last January. We're about to publish 2024, and you'll see in Big Ideas how we get to those two cases.
The world of finance is on the brink of a revolution, primarily due to the rise of digital currencies. Given the current dynamics, the dominance of the US dollar faces opportunities and challenges. While some see stablecoins threatening the dollar's dominance, others argue they might reinforce it. Central bank digital currencies are back in the headlines, thanks mainly to former U.S. President and current presidential candidate Donald Trump, who recently vowed to block the creation of a digital dollar if re-elected. He said, "Such a currency would give a federal government, our federal government, the absolute control over your money." Trump stated, "They could take your money. You wouldn't even know it was gone. This would be a dangerous threat to freedom." Cathie Wood believes that this shift towards a rules-based system is steering us away from fiat currency, removing the influence of human decisions. Now, let's redirect our attention to a video.
Stablecoins are the bridge into effectively into the internet financial system, and are playing a very important role, and probably will continue to play a very important role from an interoperability point of view and so forth. So yes, we definitely think that's going to go on. When you think about CBDCs, what are they? They're still got human beings making decisions. There's no mathematical metering. It's just a human being making decisions and setting a policy and then changing its mind. Whereas, a policy that everybody understands, these are the rules of the game, and it's not going to change. Mathematically metered, a block every 10 minutes, having it roughly every 4 years, 21 million Bitcoin, never more. I think that is moving us away from fiat currency, taking the human being out of the loop. The state of Florida, Governor Ron DeSantis has said a CBDC would not be welcome. All that would mean is government surveillance, invasion of personal privacy, like in China. And so if it's not going to work in Florida, it's probably not going to work. You won't get all 50 states. That would be a big problem, right? And I don't think it would work I think the politics would basically prevent its becoming ubiquitous in the United States.
In an era marked by economic uncertainties and constant inflation, Bitcoin has emerged as a compelling alternative, offering solutions to safeguard wealth against the erosive effects of currency devaluation. This digital currency, born out of the 2008 financial crisis, has garnered attention for its decentralized nature and fixed supply, positioning itself as a potential antidote to the pitfalls of traditional fiat currencies. What is your stance? Your input is valuable. Share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.